All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody. Today is April 24th, 2025. And the top story this morning is India and Pakistan. We've got another 2020s bingo alert is happening. Where did we start? A couple of days ago, there was a terrorist attack in Kashmir on Tuesday. 26 civilians, mostly tourists, were murdered in the Kashmir region of India, Pakistan, or China. Which country is it? Who knows? All three countries claim it. Well, the Indians are pretty pissed about that, as you might expect they are. And so began a series of retaliations over the last 24 hours or so. That began with India canceling all visas for Pakistani nationals in the country. India said every Pakistani in the country has to get out now. Pakistan responded, said, okay, all the Indians have to get out of our country. They're expelling each other's diplomats. Now, here's the thing, guys. When both countries claim the same territory and then both countries order the others to get out of their territory, what does that mean for the disputed territory? Does that mean the Indian military is going to go into Kashmir and start demanding all the Pakistanis leave? And are the Pakistani military going to go into the same Kashmir and demand all the Indians leave? And don't we have a name for that? Isn't that called war when that happens? Yeah. Oh, by the way, both countries are nuclear. Okay, this decade is not done with us, it seems. Yeah, did not see that one coming. So you can add that on top of your trade war and everything else going on in the world. And China just kind of sitting back, a third player in this race, saying, yeah, they also claim Kashmir for themselves. So is this going to end up some kind of like proxy war between the U.S. and China potentially? But this time the proxies have their own nuclear weapons. So wasn't the whole point of a proxy war during the Cold War so that the nuclear adversaries never actually fought? Well, that's not going to work this time around. If the proxies are nuclear too, yikes. Oh, and by the way, India has withdrawn from the Indus Water Treaty. That is a several decade old treaty that has basically where the two countries agreed to share the water from the Indus River. That treaty survived several wars between the two countries. Like even when they were shooting at each other and killing each other, they still abided by that treaty. Not anymore. India says we're out. Well, India controls the flow of the Indus River, and the Indus River supplies most of Pakistan's water for most of its agriculture. So if India starts doing something, diverting the flow or otherwise affecting Pakistan's water supply, Pakistan has said that would be considered an act of war. Yikes. This freaking decade, guys, we got about 5 years left in it, so it's not done with this. Meanwhile, the trade war continues this morning. China is out. One of their commerce ministers is basically saying, we're not talking. And if the U.S. wants to talk, they need to drop all of their tariffs and then we'll talk. This is after what was widely viewed as a de-escalation yesterday, where the Trump administration substantially walked back their rhetoric, suggesting that they would pull those tariffs back if the Chinese agreed to talk. The Chinese are like, we don't want to talk. Well, that's a bold strategy, Cotton. Let's see if it pays out for them. Meanwhile, Chinese factories have started to close and Chinese workers are starting to get laid off. I mean, we are hearing so much here in this country about, oh my God, we're not going to be able to get beach chairs this summer and these things are not going to be here and prices are going to go up and yep, all that's going to happen. But you know what you don't hear anything about in Western media almost anywhere is what's going to happen over in China. Why is that? Why is that? Because, you know, Newton's third law, you guys know I'm a mechanical engineer. Newton's third law, for every action, there's an equal and opposite reaction. Well, we're only getting the every action coverage in our press. Where's the equal and opposite reaction? How come we don't want to talk about that? Could it be just maybe America's corporate media is owned by the same interests that have gotten rich off the hollowing out of the middle class in America and the offshoring of American manufacturing? Could it be that the people making the decisions in American media don't want the U.S. to win the trade war? They don't want manufacturing coming back because that would hurt their bottom line. Could it be these people actually hate Mr. Orange even more than they want to see their own country prevail in a trade war? I'm just throwing it out there. It's quite possible. But I tell you, the narrative in the press is, this is Trump's war and it's only going to hurt America. Without American shelves, Chinese factories ain't going to work. And that is already starting. You don't hear anything about that in our press. Now, meanwhile, we've got some more news on the tariff front. You've got the U.S. is supposedly considering scaling back some of the auto tariffs now, specifically involving auto parts, which are also subject to other tariffs. Supposedly, as the story goes, the Trump administration is trying to avoid stacking tariffs, where if something is already, for example, tariffed because of the steel and aluminum, we're not going to put another 20% auto tariff on top of that. So that is all, again, just people familiar with the matter, ongoing discussions, nothing official there, but you can see the Trump administration is taking steps to try to at least partially mitigate the impact of this, but there's no beating around it. No getting around this, guys. This is going to be painful for everybody. Meanwhile, by the way, speaking about the Trump administration, yesterday there was a story about this Trump meme coin that just, if there's a big red mark on my forehead, it's because I hit my own head so hard when I saw this story. Just be careful, guys. The grift in the crypto sphere is getting so thick and so ridiculous. It's worse than it's ever been now. I think largely emboldened by a crypto-friendly administration, and there's good that comes along with that, but there is plenty of bad that comes along with it. And the grifters are turning it on extra thick because they are not fearful of law enforcement at all, which means you, the viewer, are on your own to protect yourself from crypto scams. Be careful. There are a lot of people pumping this crap all over the internet right now. They're paying to get their message in front of you because they want your money. It's not going to end well for you. Just keep your guard up, guys. Meanwhile, we've got U.S. companies are starting to pull their guidance. This morning, we had Southwest and American Airlines both pulled their forward guidance amid economic and trade uncertainty, worries about international tourism into the U.S. We've talked about that. We thought that was coming. A lot of these companies, there's no way to predict what the economy is going to look like in the next few months. There's no way to predict what the economy is going to look like in the next few hours because of the volatile nature of the rhetoric coming out of D.C. right now. So the companies are just saying, we're not going to guide. And, well, good. May the odds be ever in your favor. We also had Procter & Gamble lowered their guidance on trade war uncertainty, which is interesting because Procter & Gamble makes most of their stuff in the U.S. domestically. But even some of their inputs are going up in cost, and they're saying those costs will be passed on to the consumer. And we've got Google earnings after the bell today. Google parent Alphabet will report. And the question on my mind, will we hear about CapEx? Will Google answer these hard questions about all the money that they're lighting on fire in this great game of CapEx chicken? Microsoft and Amazon have already begun scaling back their data center plans. Will Google make an announcement, or will they stick to their guns? We'll find out after the bell today. The AI bubble. Your days could be numbered. Why don't we shrink my big melon of a head and let's see what's happening in the markets today? And if you please hit that like button and that subscribe button for you new guys. Come on back tomorrow. Have your coffee with the melon heads because we do this one every day. And the S&P 500 right now, it's trying to go positive. It really wants to. Look at it there. Oh, it's down by just a half a point, 0.02% lower, but lower nonetheless. It was positive a couple of minutes ago, hence the bull thumbnail this morning. Meanwhile, the Dow is down 98 points, 0.25%. Very muted moves in stocks today. Kind of surprised to see that. Maybe taking a breather after the whiplash of up and down we've had over the last few weeks. The NASDAQ, meanwhile, 34 points higher, up 0.18%. So there's a little bit of green in stocks here this morning. Looking over at the international markets here, the German DAX is down 0.1%. The FTSE in England down 0.3%. The French CAC 40 off by 0.1%. So the European stocks are a little bit lower here. Let's see what's happening in Asia. Had a decent day for the Nikkei, up about 0.5%. And, of course, the Chinese indexes, who cares, because the home team is buying stocks to prop up their stock market to hide the impact of the trade war. Meanwhile, the U.S. dollar is down 56 basis points this morning, 99.35. So we've got a slightly weaker dollar after it strengthened over the last couple of days. Looking over at USD JPY, it's red this morning, 142.35. So it's a little bit lower. We do have the yen strengthening here. But I just want to point out we had a significant weakening in the yen yesterday, actually for 2 days here. You see, we had those two green candles. We bounced pretty hard after we went below 140 earlier this week. It was on Sunday night into Monday. We actually dipped below 140. That spooked a lot of people. Ever since then, we've had that softening of the trade war rhetoric that we talked about yesterday. A little bit of optimism crept into the markets, and we saw the yen start to weaken on that news as the panic in the yen carry trade subsided. Well, it looks like that may have run its course because we're starting to reverse that now, 142.3 and falling for the yen. Looking over at the bond market, we've got a lot of red here. Lower yields, that means bond prices going higher. The 30-year Treasury, 4.782, half are down by 5 basis points. The 10-year's at 4.317, that's lower by 7 basis points. A lot of buying of bonds on the long end of the yield curve today. The 2-year Treasury, 3.805, that's off almost 6 points. And the 1 month is essentially unchanged here, 4.273, that's down by about a half a point. Looking over at commodities, we had a big sell-off in gold yesterday, but it looks like that may have run its course here. Gold is currently higher by about $40 for spot gold, $3,328. That's after it very briefly touched $3,500 before a pretty brutal 1 day and a half sell-off. Now we are back up 1.2% this morning. Spot silver, though, is still negative, $33.35. That's down about 21 cents or 0.2% this morning. The gold to silver ratio is still above 100, indicating significant economic malaise on the horizon. Copper is down about 0.3% this morning. Platinum is up by 0.33%. Palladium is higher by 0.2%, and crude oil is up here about 0.88%, $62.81 for June WTI crude. Looking over at Bitcoin, we are still around that 92,000 and change mark. I drew this red line yesterday on the stream, and we talked about how this was support for a while. Then we broke down. We failed the retest. Now the support has become resistance, and we are just kind of hanging out right around that level here. So watch this 92,000 level or so for a big move up. A break below this would be majorly bearish. A break above this, not necessarily majorly bullish. I'd like to see a break above a retest and then a move higher before I get excited about Bitcoin. But one thing I am definitely not excited about, this story. Trump meme coin soars after he asks top 220 holders to dinner. This is stupid. This is conduct unbecoming. All right, you are the leader of the free world. Maybe we wait to do our meme coins, our shit coins until after we are president, until after the whole like global nuclear war, trade war thing is avoided. Then we pump the meme coins. All right. I'm just throwing it out there. You got a busy schedule, prioritize. You know what I mean? Invitations to Trump's private recession with the U.S. president fuel Trump coins 50% price rise and add to conflict of interest fears. You think? The value of Donald Trump's meme coin jumped by more than 50% on Wednesday after its official website said the coin's top 220 holders would be invited to a private gala dinner with the president on May 22nd. The top 25 holders of the coin would also get an ultra-exclusive VIP reception with the president. Not just exclusive, an ultra-exclusive, as well as a special tour, the website said. The coin called Trump rose by more than 50% after the announcement to trade at $14.70. It fell back slightly to $12.30 in early trading on Thursday, according to CoinMarketCap. Look, guys, you're probably smart enough to figure this out, but what's happening here, people are not bidding on the coin. People are bidding on access to the president to get to this dinner so they can have their photo op, which means the second the bidding is no longer open on this dinner, as soon as that goes away, that bid is going to disappear, and this meme coin is going to go right back to where it was, kind of like the last time it got rug pulled. President should not be doing meme coins. I'm just throwing that one out there. You'd think we didn't have to say that, but look, guys, stuff like this, right? I mean, this is nosebleed, like bleacher seats kind of financial crap going on here, and it's happening in the Oval Office. So if this is going on, what do you think is going on in the darker, sleazier corners of the crypto sphere where all the real crooks and frauds live? Just be careful, guys. Just be careful. There's so much crypto crap getting pumped right now. It makes me sick. Meanwhile, the India-Pakistan story, this one in the Atlanta Journal-Constitution this morning. Keep an eye on this one, guys. It's not a hot war yet, but it very quickly could spiral into one. India and Pakistan cancel visas of each other's nationals as tensions rise after the Kashmir attack. India and Pakistan canceled visas for their nationals to each other's countries Thursday amid rising tensions between the two nuclear-armed neighbors after India blamed Pakistan for a deadly attack by gunmen that killed 26 people, mostly tourists, in disputed Kashmir. Indian authorities said all visas issued to Pakistani nationals will be revoked with effect from Sunday, adding that all Pakistanis currently in India must leave before their visas expire based on the revised timeline. The country also announced other measures, including cutting the number of diplomatic staff and closing the only functional land border crossing between the countries. In return, Pakistan closed its airspace for all Indian-owned and Indian-operated airlines and suspended all trade with India, including to and from any third countries. Tuesday's attack was the worst assault in years targeting civilians in the restive region that has seen an anti-India rebellion for more than 3 decades. Meanwhile, India has also suspended a landmark water-sharing treaty that has survived 2 wars between the countries in 1965 and 1971 and a major border skirmish in 1999. The Indus Water Treaty, brokered by the World Bank in 1960, allows for the sharing of waters of the river system that is a lifeline for both countries, particularly for Pakistan's agriculture. Pakistan has responded angrily that it has nothing to do with the attack. In Islamabad and other cities in Pakistan, dozens of demonstrators rallied against India's suspension of a water-sharing treaty, demanding their government retaliate. Pakistan warned that any Indian attempt to stop or divert flow of water between the two nations would be considered an act of war and met with full force across the complete spectrum of Pakistan's national power, which I might add now includes nuclear weapons. Oh, good. The 2020s. Isn't this decade great, guys? So you can add that to your war in Europe and your risk of war in the South China Sea. And I don't know, maybe North Korea wants to weigh in. Sure, the Middle East is always the Middle East. It's going to be great. You're going to love it. Meanwhile, China is talking or running their mouth, depending how you want to say. China says the U.S. should revoke unilateral tariffs and denies talks. You know, things were looking a little optimistic yesterday. It was like, okay, Trump softened his rhetoric. Maybe they're going to talk soon. Maybe these ridiculous tariff numbers are going to start coming back down to earth. Nope. China says, nope, not happening. China demanded that the U.S. revoke all unilateral tariffs and denied there were talks on reaching a trade deal, maintaining a defiant stance despite President Donald Trump's recent easing of criticism of the country. The U.S. should respond to rational voices in the international community and within its own borders and thoroughly remove all unilateral tariffs imposed on China if it really wants to solve the problem, Commerce Ministry spokesman He Yedong said at a regular briefing on Thursday in Beijing. He also dismissed speculation that progress has been made in bilateral communications, saying any reports on development and talks are groundless and urging the U.S. to show sincerity if it wants to make a deal. I sincerely suggest you pound sand, Mr. Hedong. The remarks suggest that President Donald Trump's comments this week signaling that he could lower tariffs on China, which currently stand at 145% for most goods, will not be enough to de-escalate tensions. The U.S. leader said Wednesday that everything's active when asked if he was engaging with China and that Beijing was going to do fine once the talks had settled. Beijing seems to not be in agreement with that assessment. Meanwhile, in China, it's not like things are going well. Factories slow production, workers are sent home as Trump tariffs hit China's economy. This is in MSN reporting on what the Financial Times has said this morning. Factories in China have begun to slow down production and are sending some workers on unpaid leave. The trade war launched by U.S. President Donald Trump is reducing orders for a wide range of products from jeans to home appliances, the Financial Times reports. As most Chinese goods are now subject to U.S. tariffs of at least 145%, some factory owners say American clients have canceled or suspended orders, forcing them to cut back production. About 15% of all Chinese exports last year went to the U.S. In interviews with the Financial Times and dozens of social media posts, workers shared photos of halted production lines or notices about factory closures, highlighting how the tariffs are beginning to take effect. And I just want to mention this comment here. This guy, Han Dongfang, who's works at the China Labor Bulletin, he's saying restructuring China's manufacturing sector will be a long-term process and workers will be sacrificed. Okay, that's kind of strong language, sacrifice. Maybe we don't throw the workers into the volcano to placate the gods of the trade war just yet. Maybe we could talk, but it seems leaders don't really want to talk, even as the factories are shutting down. And guys, I would just again refer you to Newton's third law: for every action, an equal and opposite reaction. If the press in the United States wants to side with China and talk about how bad everything in America is going to be and how expensive things are going to get, always remember whatever is happening here, an equal and opposite reaction is taking place in China. They've got their own problems. The press just doesn't want the U.S. to win the trade war. Let's face facts. They're owned by the same people who got rich on the destruction of the American middle class. Do you really think Disney, who owns ABC News, wants the U.S. to win the trade war? Ask yourself, where are all those Disney princess dolls made? It sure as heck ain't in the U.S. Do you really think the Washington Post, owned by Jeff Bezos, one of the biggest shareholders of Amazon, which sells predominantly Chinese-made crap, do you really think they want the U.S. to win the trade war? And CNN is CNN, Orange Man bad. Honestly, if Donald Trump was arm wrestling with Al-Qaeda, CNN would be rooting for Al-Qaeda. So, again, the biases in the press, and look, I've got my own biases. You could probably tell where I lie in the political spectrum, depending on my mood. It really is a shame that so many powerful interests in the United States right now are going to such great lengths to avoid hiring Americans, all while claiming to give a shit about Americans. Keep that in mind. Meanwhile, U.S. officials mull easing tariffs and targeting the auto industry. Possibly another partial walkback of tariffs is coming from the Trump administration. Nothing decided yet, but the Trump administration is considering whether to reduce certain tariffs targeting the auto industry that carmaker executives have warned would deal a severe blow to profits and jobs. One measure would spare automobiles and parts already subject to tariffs from facing additional duties from levies on steel and aluminum imports. That's according to people familiar with the matter. That would eliminate the so-called stacking of levies. You won't have to pay both tariffs, just one or the other, I guess. Another options being studied would be to fully exempt auto parts that comply with the U.S.-Mexico Trade Pact, known as the USMCA, some of the people said. Those components don't currently face tariffs, but the administration had planned to tax the non-U.S. share of those parts from Canada and Mexico. Fully sparing those parts would abandon that approach, which would present a potentially Herculean logistical challenge. Imagine being the customs people working at the port, and you need to be able to translate what is and isn't subject to tariffs, and if so, what are those tariffs? Considering the rate the rhetoric in Washington is changing and how the guidance is always changing, that is not going to be an easy job. The proposals and options remain under consideration, and President Trump has not signed off on anything, cautioned the people, who, of course, asked not to be identified discussing the matter because it isn't public. His tariff policies often change quickly, underscoring the fluidity of policy deliberations, but the discussions offer a signal that the administration is considering ways to narrow the scope of levies affecting the industry. And then this morning, we also got U.S. durable goods orders. Now, these were expected to rise, and they did rise. Why? Because people are front-running tariffs, or at least they were front-running tariffs in March. We suspected this was happening. We got confirmation today. Durable goods in the United States for the month of March increased by 9.2% over the previous months. Guys, look, you can see it right here. Big spike, 9.2%, up from 0.9% in February. Everybody got as much stuff into the country as they could before Liberation Day. I think they probably underestimated just how high the tariffs were going to go. They're probably wishing they had bought more stuff. But the point being here, the real pain on Main Street from the tariffs, it's still a couple of weeks, maybe months away. Because you had a lot of these companies filled their shelves, filled up their warehouses, bought up the inventory before it got more expensive. That's going to buy them some time. And so they won't run out of this stuff probably until midsummer. That means the price impacts, the inflationary impulses from these tariffs not being felt yet. You might see some prices start to go up, but the real pain doesn't get here until the summer. and the fact that everybody crammed in all these things, bought these durable goods in March, maybe that delays the pain a little bit more. So it gives us some time to get a deal cut. But meanwhile, we are seeing the effects of the tariffs in Wall Street already. American Airlines pulls their full year outlook on softer demand worry. Now, we kind of knew this one was coming. It's impossible to forecast what's going on. There's a lot of worry about international tourism, especially from Canada right now, people not buying as many airline seats. So American Airlines, when they reported their earnings, they have pulled their forward guidance. Now, Americans' actions echo those of Delta Airlines and the parent of Frontier Airlines, which also pulled their 2025 guidance as President Trump's trade war saps demand for travel. Waning confidence among consumers and businesses have flatlined revenue growth, Delta said earlier this month. United Airlines Holdings took the unusual step last week of offering dual earnings forecasts, one for a stable environment and a reduced one based on a recession. And it's not just American Airlines. We have got Southwest Airlines is doing the same thing. Southwest to cut flights this year, pulls guidance citing macroeconomic uncertainty. So 2 airlines on top of what United did, on top of what Frontier did. You got 2 more this morning, American and Southwest pulling their guidance. And we've got Procter & Gamble, the maker of Tide, cuts earnings outlook in part due to tariffs, as CEO says price hikes are likely. Now, this one's interesting. This is where it's hard to tell how much of this is actually a slowdown in P&G's business and how much of this is the Trump goggles where everything that happens is because Orange Man bad. Because Procter & Gamble makes pretty much all of their stuff in the U.S., but they do get some of the inputs for that stuff from other countries, which could be subject to tariffs, driving their costs up. So maybe that's a factor here. Procter & Gamble on Thursday reported mixed quarterly results as demand for its products fell, gave a dimmer outlook for the current quarter, and said price hikes could be coming. The company, which owns Tide and Charmin, slashed its forecast for core earnings per share and revenue for the full fiscal year, which is in its final quarter. P&G CEO John Mueller cited new tariffs and the company's plans to invest back into its brands during a period of uncertainty as the reason for its slashed outlook. Now, look, guys, Procter & Gamble also makes some of the more expensive stuff, right? This is like your private label stuff. You've also got your bottom shelf brands that for the last year or so, we've seen those bottom shelf brands gain market shares. People try to save money because of the ongoing cost of inflation. And I would also add that this quarter they just reported, well, that's from previous months before the tariffs. So the tariffs didn't play a role in Procter & Gamble's recent earnings. So it really is hard now to separate the trade war rhetoric from what's actually going on in the economy. P&G already makes many of the products sold domestically in the U.S., but President Trump's tariffs will likely raise some of its costs. There will likely be pricing. Tariffs are inherently inflationary, but we're also looking at sourcing options, Mueller said on CNBC's Squawk Box on Thursday. He added that price hikes tied to the tariffs would occur in the next fiscal year, which starts in July. And one more I wanted to share with you guys today. We got Google earnings after the bell today, and this is a big story for the next couple of days, or at least for the next week or so when we get big tech earnings. CapEx is so important. Will these companies reduce their CapEx? Will they suggest or hint at reducing their CapEx while not changing the numbers? We don't know, but this op-ed in Bloomberg this morning kind of hints at that. AI was already clouding tech earnings, then tariffs hit. We're going to skip over the tariff part of this story. We're going to zoom right back down to the AI part of the story. While the companies can't offer clarity on tariffs, investors will want firmer direction on the more practical business of breaking ground on new data centers to accommodate the growth of artificial intelligence. Ah, yes, the AI bubble. Heading into the year, the big tech companies pledged capital investments of more than $325 billion. The biggest bet on an unproven technology in the history of the industry. Since then, there have been conflicting signals. Microsoft's head of cloud operations, Noel Walsh, wrote on LinkedIn that the company was slowing or pausing some early-stage projects as it related to building data centers. A Wells Fargo analyst note reaffirmed the Microsoft pullback and added that other biggest player, Amazon AWS, had paused a portion of its leasing discussions on the co-location side. Co-location in this context typically means leasing data center resources from a third party. However, AWS's head of global data centers, Kevin Miller, took to LinkedIn to stress that any canceled or paused deals should not be read as indicators of much. The maneuvers were just part and parcel of the expansion process, something the company has been doing for almost 2 decades. That experience has taught us to consider multiple solutions in parallel. Here's your corporate gobbledygook. Some options might end up costing too much, while others might not deliver when we need the capacity. Other times, we find that we need more capacity in one location and less in another. Expect analysts on the earnings calls to seek greater clarity in offering it. Each company will strive to thread a needle. Costs can't spiral, nor can they risk pulling back so far as they fall behind in the race for the ultimate AI prize, whatever that may actually be. And I just freaking love this last sentence here, this last phrase. There's so much to unpack in this phrase, and this is really what's important about big tech earnings. It's not so much the numbers. Everybody's going to focus on the beat or the top and the bottom line. CapEx is what's so important here. And they're talking about it here, how these companies they're basically stuck between a rock and a hard place. They're phrasing it like they need to thread a needle. No, they're damned if they do, they're damned if they don't. They can't keep burning their own money on these investments that all lose money. None of these AI investments have made any profits. They are all cash burning machines. So these companies can't stop that. But if they do stop that, their stocks are going to collapse because this AI bubble has inflated the earnings of these, or not the earnings, they've inflated the values of these companies by trillions of dollars. And if it turns out that bubble was a bubble indeed, well, all those stocks are going to go right back where they were, maybe all the way back to where they were in November of 2022. Yikes, that's a hell of a lot lower from here. And so, they're saying, we need to thread the needle, but they risk the ultimate AI prize, and then they give it away at the end here, guys. The ultimate AI prize, whatever that may actually be, because they're saying, it turns out the ultimate prize, we never really knew what it was. We just kind of talked like it was quadrillions of dollars. No, it was never real. It was all just an accounting gimmick. And investors are getting wise to that. And well, we may find out if those CapEx numbers come down. You better believe there is a reckoning in the NASDAQ coming. Is it going to be this quarter? Maybe, maybe not. It's almost like maybe I should do like the AI bubble in 99 seconds, a video like that. I don't know. It's been a while since I did one of those. Just a thought. I just throw them out there. You guys do what you want with them. And I just want to say thank you so much to Austin Feinberg. Thank you, Austin, who says, brother, working for a freight forwarder, many company supply chains are paralyzed. I have heard the same thing, and I have somebody coming on the channel next week to talk about logistics, and I cannot wait for that interview because I'm seeing the same thing, guys. Others are continuing as normal, and in China's factories closed, tens of millions of people out of work, Shanghai shot. So, Mish and I were talking about this today. First of all, thank you so much, Austin, for supporting the channel. I've heard exactly what you're hearing about the logistics. I've seen people saying, hey, truck drivers, be careful taking loads into California because you might get stuck deadheading over the Rockies and across the desert before you find anything coming out of California because LA ports are slowing big time. I'm seeing blank sailings, basically canceled ships coming out of China. Now, that being said, Mish and I were talking this morning. It's really hard to get reliable information out of China. Now, I follow a couple of Chinese channels like Business Basics and China Observer, fantastic channels. They put out really good content, but I suspect these channels have something of a Falun Gong influence, which is this religious sect in China that's persecuted, and a lot of them are hiding in the West. They're adamantly anti-CCP. So there's also a certain degree of propaganda element behind that. I'm not saying they're wrong. It's just that it's hard to really know what's real and what's propaganda. But that being said, look, China needs American shelves every bit as much as we need their crap to put on it. Arguably, they need our shelves more so. And tens of millions of people out of work, I don't know. Maybe that's already happening. I think we'll certainly get there if this persists. It might be a little quick to get to a number that high within the first 2 weeks, maybe a little fast. I might question that one, but certainly within another week or two, we would be there. Abso-freaking-lutely. Good luck to your brother working in freight. It's going to be a tough time to work in logistics. And thanks again, Austin, for supporting the channel. Armando Reyes, thank you, sir, for supporting the channel. He says, in my opinion, regardless of any situation, trade war, high unemployment, price of gold, or anything else, the trillions in debt still remains. Yeah, the trillions in debt still remains, and that trillions in debt is dependent on an ever-expanding supply of U.S. dollars in order to keep it afloat. And, well, it looks like that ever-expanding supply of U.S. dollars may not be ever-expanding for much longer. Look, guys, let's face facts. The Federal Reserve is not on the American side in the trade war. The Federal Reserve does not want the trade war. The Federal Reserve is owned by people who benefit from the lopsided trade with China, the people who got rich outsourcing manufacturing. They're the same people who own and control the Fed. So the Fed is not going to expand the money supply to help the United States win the trade war. The Fed doesn't want us to win. And so that means if you're sitting here saying, oh, don't worry, the Fed's just going to spin up the money printer anytime. Right now, the Fed has said, no, we're not doing it. They've planted their feet, and they're showing no signs of reversing that. Now, Secretary Besson over at the Treasury, he's doing everything he can to try to offset that. But in a war between the Fed and the Treasury, who wins? I don't know. But if the Treasury is also fighting China and also fighting American companies that they want to come over overseas, you can't fight everybody all at once. You got to pick your battles. And, well, picking your battles is not exactly a strong suit of the current leadership, is it? So it's going to get messy. Don't bank on those money printers spinning up right away, though. I think it's got to get a lot worse before that happens. Thank you very much, Armando, for supporting the channel, sir. And Viv B, thank you for being a melonhead for 13 months. She says, imagine a world with no Fed and a stock market. I can imagine a world with no Fed. I like the stock market, right? The stock market, as long as it is not a Fed-induced casino, serves a vital function and allows companies to access capital and expand operations, raise money. It also can be an instrument of wealth creation for people and an instrument of savings, a way to safely invest your money, but not the way we do it. The way we do it, it is not. And I think the easiest way to return to a healthy, functioning stock market is to get rid of that first one you mentioned, the Fed. Get rid of them. We didn't have a Fed for the first 150 years of this country? And did we all die? No, we didn't. We didn't have a Fed. There was ups, there was downs, there was ups and downs. Everything just kind of hummed along. Ever since the Fed came along, well, we've had 2 world wars. We've had the destruction of the middle class. We've had all kinds of problems. The debt ballooned. Man, let's just go back to not having one. Just a thought. Thank you, Viv B. I agree. Spud Ruckus. Could you describe the ruckus, sir? He says, good that like button, folks. Yes, good that like button, folks. Absolutely, I agree. You good the heck out of that like button, says Spud Ruckus. Go ahead, hit that like button and that subscribe button. Thank you, brother, for being a melonhead for 7 months and for supporting the channel. Piggo's Trading Desk. What's going on, brother? He says AI bubble has a lot of parallels to the Mississippi bubble. In the Mississippi bubble, John Law's bubble, he created his own currency. And you know what? The AI bubble, you're exactly right. They created their own currency. They call them data center credits. Amazon did it with Anthropic. Microsoft did it with OpenAI. Heck, even Magnetar did it with CoreWeave. They're all doing it. Very good point there, Mr. Piggo. France needs a lot more capital, and John Law happened to have a mechanism. Well, in this case, these AI startups needed capital, and Wall Street engineered it out of thin air in order to inflate the revenue numbers of the hardware manufacturers and the hyperscalers. And that convinced retail traders to pile into stocks, which allowed these companies to issue more shares and raise more capital. Watch that big tech CapEx, Piggo. That is the decision point. If big tech scales back their CapEx, this thing, the floor will drop out. And, well, without all that CapEx, what's going to pay for all those NVIDIA GPUs? Besides nothing. Oh, and by the way, the whole China illegal sales, that thing going on there, you notice we got a little bit of a trade war on. That could blow up at any second. Yeah, man, AI bubble, lots of parallels to Mississippi. I agree. Thank you so much, Piggo, for supporting the channel. Also looking forward to talking to you in a couple of days on your channel, perhaps. I did see that email. Thank you, sir. And everybody, I just want to say thank you so much for having your coffee with the Melonheads this morning. I appreciate that very much. Thank you guys for the super chats, as well as you, my magnanimous Melonheads on Patreon and YouTube. Thank you guys for supporting the channel. Links down below to all that good stuff, should you feel so inclined. Don't forget that like button and the subscribe button on the way out. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.